Welcome back to Explain the Charts, your go-to source for in-depth market insights. Today, August 11th, 2025, we're putting the spotlight on Microsoft, ticker Microsoft, a tech titan that has been making significant headlines. Before we dive into the charts, let's quickly unpack the latest news surrounding Microsoft, which provides crucial context for its recent price movements. Microsoft recently reported stellar Q4 2025 earnings, blowing past analyst expectations with an 18.1% year-over-year revenue increase to $76.44 billion and an EPS of $3.65. This impressive performance is largely fueled by the continued explosive growth in its cloud services, particularly Azure, and its strategic investments in artificial intelligence, including a long-term focus on quantum computing. Unsurprisingly, analyst sentiment remains overwhelmingly bullish, with a strong buy consensus rating and many analysts raising their price targets, indicating significant upside potential. However, there's a nuance. Despite these strong results, Microsoft recently conducted a small round of layoffs, affecting around 40 positions in Washington, a tiny fraction compared to earlier larger reductions this year. This move, though minor, has reportedly led to some negative investor reaction, questioning its justification given the company's robust financial health. Furthermore, Barcart.com highlighted Microsoft's strong free cash flow, suggesting the stock might actually be undervalued by as much as 28%. As of this morning, Microsoft is trading around $520.07, down slightly from its previous close, signaling a bit of a pause after its recent rally. Now, let's turn our attention to the daily chart of Microsoft to see how these fundamental developments translate into price action. Looking at the broader picture from early 2024, we can observe a general bullish trend, with notable periods of consolidation and sharp movements. Notice the significant dip around late April 2025, where the price dropped from highs near $420 to a low of approximately $344.79. This sharp correction aligns with reports of earlier, larger layoff rounds this year, suggesting that workforce adjustments, even if perceived as strategic, can trigger immediate negative market reactions. However, what followed was a dramatic reversal, a powerful bounce in early April 2025, highlighted by a candle on April 9th that saw a staggering 10.45% gain. This V-shaped recovery off the $345 support level demonstrates strong underlying demand and likely reflects positive expectations building up ahead of its Q4 earnings. From that low, Microsoft embarked on an impressive rally, pushing steadily upwards, forming a clear uptrend channel. Zooming into the more recent price action on the daily chart, this relentless climb culminated in an all-time high of $555.45 on July 31, 2025. This peak was a direct response to the Q4 earnings announcement, which, as we discussed, significantly exceeded expectations and reinforced confidence in Microsoft's cloud and AI strategy. The market's enthusiasm was palpable, with a massive surge in volume accompanying this price explosion. However, since hitting that peak, we've seen a noticeable pullback, with the price settling back into the $520 to $530 range by August 8th. This consolidation, following such a rapid ascent, is not entirely unexpected and can be attributed to profit-taking and perhaps the recent news of the smaller layoff round, which introduced a hint of caution. The $555.45 level now acts as immediate strong resistance, while the $520 zone, which was a previous resistance area during its ascent, now serves as a crucial short-term support level. Let's get even more granular and switch over to the 1-hour chart to analyze the immediate aftermath of that monumental earnings report. Here, you can clearly see the massive bullish candle on July 30th, 2025, around 2000 hours Universal Time Coordinated, when Microsoft gapped up and surged, marking a dramatic shift in market sentiment. The price rocketed from roughly $513 to an hourly high of nearly $556 within that single hour, reflecting the intense buying pressure. This was followed by another significant jump, pushing the price towards the all-time high of $562.17 in the subsequent hours. This powerful move on strong volume confirms the market's overwhelmingly positive reaction to the Q4 results. Following this initial explosion, the hourly chart shows a subsequent period of retracement. Prices pulled back from the $560 to $562 zone, eventually closing the daily candle at $533.50. This pullback could be interpreted as healthy profit-taking after a parabolic move, rather than a fundamental shift in trend. The fact that it held above the pre-earnings breakout levels, specifically around the $510 to $515 mark, is a positive sign for short-term bullish continuation. Observe how volume during this pullback is generally lower compared to the initial breakout, suggesting less aggressive selling. Moving to the 15-minute chart, we can examine the very latest intraday action from August 6th to August 8th, 2025. After the post-earnings volatility, Microsoft has been trading in a tighter range, generally showing some downward pressure. On August 7th, we see a gradual decline from around $528 down to $518 by the end of the trading day, consistent with the Google search result mentioning Microsoft slipping slightly. This minor slip could be attributed to the recent small layoff announcement that, while strategically minor for Microsoft, caused a knee-jerk negative reaction from some investors. The price has found support around $517.55 on August 7th and $519.41 on August 8th, indicating a potential base forming in this lower $520 to $522 range. Monitoring these intraday reversals and volume spikes can offer precise entry and exit points for short-term traders. So, what does all this mean for Microsoft? In the short term, Microsoft presents a mixed picture but leans cautiously bullish. The strong earnings and cloud growth are powerful long-term drivers, reinforced by a consensus strong buy rating and high analyst price targets up to $609.86. However, the immediate challenge is to consolidate above the $520 support level and reclaim ground towards its all-time high of $555.45. A sustained break above $555.45 with strong volume would signal a continuation of the bullish trend, with the next psychological resistance likely around $575 to $600. Conversely, a break below the $520 support could see Microsoft test the $510 to $515 area, which served as critical support before the earnings breakout. A more significant reversal would only be indicated by a breach of the $480 level, a scenario that currently appears less likely given the strong fundamentals. For long-term investors, the fundamental story remains compelling, especially with ongoing advancements in AI and quantum computing. The recent pullback offers a potential entry point for those who missed the initial surge. Keep an eye on future news regarding Microsoft's AI initiatives and any further workforce adjustments. Increased volume on upward moves and decreased volume on downward moves would reinforce a bullish outlook. Remember, trading involves risk, and this analysis is for informational purposes only. Always conduct your own research and consider your risk tolerance before making any investment decisions. That's our in-depth look at Microsoft for today. Don't forget to like, subscribe, and hit the notification bell for more chart explanations from Explain the Charts.